Welcome back, everyone, to Stay in Your Lane. I'm your host today, John Mahle. Uh, Tough times, crazy market, ups, downs, weather. It's time to go. The gentleman has the data. With us today, Eric Starks, FTR. Enjoy Eric immensely. He's real. He just calls it like it is. And thank you for being on, Eric. I want you to know we do appreciate you. And also today we got podcast contributor for Stay in Your Lane, Joe Lombardo. Everyone. So everybody loves Joe. Always
Go,
has.
Go Hoosiers.
Oh yeah.
Oh, hey, celebrating the Hoosiers. Joe, you're in Illinois. I don't know that that's allowed.
We don't have much good football here.
That is a fact. So what are you going to do? But, Eric, I first got to meet you at a conference a couple years ago. Enjoyed you very much. Love what you do. And let's kind of start off with everybody to understand. FTR tracks all types of data in transportation from, all types of areas, extremes. If we want to know what's going on, I'm dying to hear from you what your thoughts are, because I'm going to go out and say this is not, in the 33 years I've been in the trucking industry, we've not been in this position ever. So, kind of understand what's different and what you're seeing. If you'd like to go ahead and share with me what you have compiled, that would be wonderful.
Awesome. Oh, John, thanks for having me. It's great to be back and hang out with you and Joe. And Joe and I go back quite a long ways, actually. And so it's wonderful to have this time. And I mean, at FTR right now, you are absolutely right. This is an odd time. Things are just a bit crazy in so many different ways because understanding the market right now has been very difficult. In a lot of ways, it feels like we should be able to understand what's happening. It should be pretty easy to do that, and it's not. And a lot of it really comes down to not can we understand what's happening right now, but it's really what's going to be happening into the future. And that ultimately right now is the hardest thing for most people to grapple with. But there are some things, and you and I will get into this a little bit on what's happening right now. Also, there is visibility issues, but I think I can bring some context to some of this, especially as we start talking about English proficiency, language issues, understanding non-domiciled drivers, those types of things, and what does that impact on the capacity market. So I think the one thing that I would probably like us to start off with, which would be helpful, is to kind of talk about what's driving the base market right now. And one of the things we've talked about, John, in the past is about capacity and what's driving that aspect of capacity. And I know that drivers is one of them we need to talk about. Equipment is another. But just the basic freight market is the main crux of the piece of everything, and I would think that would probably make the most sense to kind of start off talking from there and giving you kind of some understanding of what we're particularly seeing there.
Well, yeah, I mean, it'd be ideal if you just give us all the answers.
Well, I can do that, but I want to make you kind of have to work for it a little bit here. So I think one of the things that drives this particular market, and it's such a basic thing that we as an industry forget. We talk about capacity, we talk about rates, we talk about all of these different things, and the base element is freight. Freight drives everything. If you don't have freight, you don't have rates, you don't have equipment, you have nothing. So if we don't level set with that first, then it becomes really problematic to have a good discussion. And one of the things that we have found over the years is the one of the drivers of freight is the industrial sector. It's not the sexy consumer, the consumer sector. And so one of the things I'll show is we look at the industrial sector, an industrial production outlook has been very weak as we moved into 23 and through 2024. As we got into 2025, it's actually seen a little bit more of a rebound than we had anticipated. Now, some of that is not freight directly because we have things like some of the precious metals. It'll do some weird things. But by and large, it's done okay. But it has started to weaken. And if we think that, we say 80% is the industrial sector, 20% is the consumer, if you kind of go with that, well, what we're seeing is that this particular market is clearly slowing. And we initially, though, thought that we were going to be in negative territory right now. And we thought as we moved in the first half of the year that the numbers would be negative. Now we're kind of just treading water. And that's okay, but that's not great. That's not enough to turn the market conditions. And sometimes, people look at these and they go, I don't understand what you're looking at. So sometimes I find it easier just to look at the annual growth rate because that takes away some of that volatility. And the base takeaway there is we're going to see about 1% growth in the industrial sector for the foreseeable future. And for freight growth, that's okay, but you really need to see somewhere close to 2% or above for there to be really noticeable changes within the freight market. Okay, let me take a pause there for you for a minute here.
Joe, do you have any questions?
Yeah, I guess the thing that confuses me, Eric, is that we see so many differing signals coming from the economy. You talk about industrial, then GDP numbers come out. Then this week we see UPS laying off 30,000 people, Amazon doing it. There's all kind of mixed signals. So I don't. How do you how do you wade through all that, all those signals that seem to be contradicting each other?
Yeah, honestly, that is a wonderful question. So what we have to do is we go through thousands of data points on an ongoing basis. Every month we're looking at all of this. And what we're trying to do is not explain every data point because sometimes it's not always explainable. Some are, but not all. But what you're trying to do is create a narrative and you're trying to tell the story of what's happening in totality. So because we know data, for example, gets revised. I mean, that's part of the normal economic process. And so what we have to do is try to triangulate that information. So for us, for example, like you said, we had the GDP numbers come out for Q3. They look really good. Q4 numbers are going to be coming out here in a little bit. They're likely to be halfway decent. So what we have to do, though, is parse through that a little bit better. So let's talk through just GDP in general, because that one is probably the most noticeable one that everybody knows about, right? They look at that. But when we dissect that a little bit more, the freight component market of that has been fairly weak. We saw a big jump in the first quarter. We saw a huge decline in the second quarter. And then it has kind of stabilized, but it's been very limited growth, if at all. So that tells us that other aspects of the market are holding that up. For example, services. And services, by and large, isn't freight by itself. So there's that disconnect. The other part of it then, too, is you have to kind of look at and say, well, as we think about the employment, because you talked about that we have had weak job growth. And in fact, we've seen probably some negative numbers coming up in over the last 3 to 4 months. And those suggest that the market has stalled out a little bit. What was interesting was as we started moving through this year, at the beginning of the year, we actually had our numbers going down slightly negative by Q3 and Q4. And I remember talking to the team about that and saying, okay, if we're going to see negative job growth, then the likelihood that we are in a recession at that point in time is very, very high. And what's interesting is we've actually gone negative, and it's been about a quarter later than what we had anticipated, but we're not in a recession. And so this is the disconnect that everybody's trying to understand. How does that work? And then how do we've heard a lot about the Federal Reserve, and interest rates. How does that all play into it? The base, everything when we take this into totality. suggests that a market that is still relatively stalled out and kind of stabilizing. And right now, that gives me a little bit of hope that if we're stabilizing, that the likelihood that we see an increase in demand starts to go up. And ultimately, the bigger issue really comes down is, why are we stalled out at this point in time? And as we moved into 2025, coming out of 2024, we were really poised for decent economic growth. And we thought by the middle of the year, the freight market will be taking off. We'll start seeing rates picking up, all of that stuff. And then what really collapsed that was when the administration came out and said, oh, we're going to start doing tariffs, and we're going to start doing all these different things. And then things kept moving, and everybody, all the businesses said, hang on, I'm going to wait until I know what's happening. And that amount of chaos has continued up until now. And I think businesses are feeling a little bit better about understanding how to read that. But we're still seeing things being thrown out there that make businesses say, wait a minute, I thought I could move in this direction. Now I have to wait again. That is what's really creating a lot of this disconnect in what we're seeing, and trying to read these tea leaves becomes a little bit more difficult. And like I've always told people before, I said, you tell me what Trump is going to do, and then I can tell you what that's going to do for the economy. And for some reason, nobody's been able to tell me that.
That was a great question. Great answer, Eric. That's exactly why we come to you. I have a question in reference to this, because we see these different snapshots of this information, that information, which you're talking about, kind of deciphering and filtering it. We're seeing that inventory levels are extremely low in not just one area, it's across the board. And, I would love it if you could share what your thoughts are, because I almost thought the COVID time period taught people a lesson that, maybe they should have a little more inventory on hand.
Yeah.
But I think we're back to just in time and not wanting to inventory anything that we don't have to again. That, we're through the depleting process, things have kind of stabilized, and now we're trying to look up, but there's no inventory.
Yeah, it's. I mean, honestly, that is a really great question, a great topic to talk through, because as we moved through the year, and we saw it, and when the administration came out and said we're going to do tariffs, we're going to do all these, we thought we would see a huge jump in inventory. Well, we did see a big jump in imports, but it didn't lead to huge jumps in inventory. In fact, inventory levels stayed relatively low. And to your broader point, they have been kind of coming even lower, and they're staying at low levels. So let's kind of dissect that just a little bit. When we talk about low levels, we have to understand them relative to sales activity. So when we look at the inventory levels, we say, okay, how much sales activity is out there, and is it right sized? And to that point, we clearly have seen that those inventory to sales ratio levels have been very, very low, and they have not come up noticeably. That is especially true for the retail sector. So retail inventories, very, very low. The wholesale market, they were getting out of hand. Those are actually high for quite a period of time. Those have come back down, and those are now at lower levels. The only one that seems to be holding up at higher than desired levels, or at least they're very stable, is manufacturing. And so that's part of what's playing into our industrial sector outlook, is that they have enough inventory within that particular space. Will they get right-sized? I think so, as we move in through 2026. But clearly, to your broader point, there is a disconnect in the amount of inventory in the system. And for me, that gives me hope that we can continue to see a rebound in the in the GDP and the overall macro economy.